Chapter 1D. The financial services industry here in the UK is subject to dual regulations, one that comes as a condition of its membership to the EU and the other from local government. Much of the UK financial regulation actually comes from the EU, which is very active in this domain. Since European law has been enacted in the UK for all of its membership duration, it had the effect of driving around 70% of the FCA's policy-making efforts. These laws will remain post-Brexit unless modified. Here's something to remember. In 1999, the EU came together in agreeing that the single market needed lots of improvement, seeing that the various actors within the Union had different rules, different laws in their respective markets. That gave rise to the FSAP, Financial Services Action Plan, an organization that promoted these three objectives: create a single EU wholesale market, homogenize the bloc effectively, achieve open and secure retail markets, promote transparency and security, put in place prudential rules and structures of supervision, promote prudence. This move has effectively evened the financial playing field. So by removing frictions and barriers between markets, things like taxes, this gave them a unique and unified legal framework, and they raised all the bloc standards to the highest levels. By the time the FSAP finished its work, the financial crisis of 2007-2008 hit the European market, and this has revealed the major weakness that came with a single homogeneous market. When a limb aches, the entire body needs rest. Therefore, to prevent any financial crisis from affecting the entire Eurozone like in 2008, three European supervisory authorities were created. And these are the EBA, European Banking Authority. This body stress tests the entire banking system to spot the weaknesses and make recommendations on how to solve these problems. The EIOPA, European Insurance and Occupational Pensions Authority. They support transparency and stability of financial markets, and they protect policy and pension holders. And the last one is the ESMA, the European Securities and Markets Authority. What they do is improve functioning of financial markets in Europe and strengthen investor protection. Think of it as a sort of financial markets watchdog. Focus point. The FSAP's three aims were to promote Europe's wider economy by removing barriers, by increasing competition among financial services within the bloc, and thereby making markets more efficient, and last, to reduce the costs of raising capital. All of these European initiatives affect the UK directly, as we've pointed out before. However, we must not forget the dual regulation situation here in the UK. The government department responsible for the regulation of financial services market is the Treasury. It's also called Her Majesty's Exchequer. This institution is under the direct authority of the Chancellor of the Exchequer, currently Rishi Sunak. The key pieces of legislation that govern the regulation of conduct of all businesses in the financial services industry are FSMA, Financial Services and Markets Act of 2000, FSA, the Financial Services Act of 2012, and the Bank of England and Financial Services Act of 2016. There are four organisms that regulate financial conduct here in the UK. Let's enumerate them. The first one is the Prudential Regulation Authority, PRA. This is a branch of the Bank of England, and its responsibility is prudence in big firms like banks and insurers. It lets them know the minimum level of capital to hold and make sure they properly manage risk. An example of poor risk management is a bank that lends money to an individual who has no source of income and no savings whatsoever. And then we have the Prudential Regulation Committee, the PRC. This is yet another branch of the Bank of England that operates alongside the PFC, which is the Financial Policy Committee. The FPC was set in 2010 to keep a close eye on key economic indicators and intervene in order to keep our financial system safe. One of the things I appreciate most about this committee is that in the event of a bank failing, they immediately intervene to make sure the resolution happens in an orderly fashion with minimal disruption to the economy as a whole. Let's forget about the EU role for a second here. Within the UK regulation point of view only, some companies have dual regulations and others a single one. Banks and insurers, for instance, deal with the PRA and FCA at the same time, while the rest only have the FCA on their case.